Hello and welcome to the Stock Planner channel. We're a swing trading channel. We're sharing our ideas, learning how to do this, and winning. I have an algo written in OmniBroker, and I got a signal saying that KNX, ticker symbol KNX, Knight Transportation, was bouncing off its support. This is a relatively cheap stock at $55, and I thought I'd do a little more analysis and see if I can put together a cheap option play. This is not a trade recommendation, just merely what I'm going to do. I recommend that you do your own due diligence, learn it, and then you can win for life. So let's get started. Using Simply Wall Street to do some fundamental analysis. Again, looking at ticker symbol KNX, Knight Swift Transportation. It's a trucking company all over the United States and Mexico. It's up 21% for the year, but over the last 7 days it's been down. Looking at the snowflake, it gives us a high-level view of the company. It pays a dividend. It's a fairly healthy company. The future doesn't look all that bright. There's some issues, and that's one of those issues is just only going to grow by 3.6% per year. That's not that attractive. And it doesn't appear to be undervalued at all. We'll take a closer look at it. The major competitors are listed here, and I have a small trade currently in JB Hunt as well. And you can take a look at the chart, and you can see it's trying to trend up. Last few days been down. Might be a good time to buy. Their earnings date is July 20th. One way to do the valuation is just to count the number of red marks. There's 5 of them and only one green. And that is, it has a low PE. That's cool. Here is Knight Swift. There's JB Hunt, which is slightly overpriced. And Knight Swift is undervalued amongst their peers. In other words, it's a fairly cheap stock when you compare it to JB Hunt. As I expected, the fair price of this stock is $53.66, and it's currently at $54, about equal. And this is based on the discounted free cash flow method. In other words, how much cash he has to spend investing it back into the business. Money available. Looking at future growth and doing a rink-a-dink analysis, there's 5 X's and 1 check. Earnings and revenue growth. Revenue is increasing. Earnings is pretty flat. Future growth estimates. Earnings for the company. Earnings for the industry. That's not too cool. Revenue growth for the company and in the industry. Not so cool. This stock looking like it's not going to go anywhere. Swinging over to Amazon Cloud, I have an application written in OmniBroker, and this algo scans for support levels and resistant levels, support, resistance, and the MACD crossovers. And we're about to get one of those very soon. I run this application when I feel like it. It's manual, but I could automate it. That's why I have a cloud, and I have a lot of other algos that run like my alerts and stuff that tell me the very same thing. I get an email or text alert. This is what the algo looks like, and it basically uses a mean with a look back period of about 20 for level support and resistance, and then the high value when we have a crossover of that mean, you get a signal. Nothing complicated. It's not really a true support and resistance, but it gives me close enough to kind of take a look at it. And I can run this on a basket full of stocks, which I do. I don't scan. If you're using Finviz, you have to scan the whole stock market. I scan about 140 stocks that I know and love. And when I do that, it says that 2 days ago, we had a crossover for support. And it looks like right there. If you were drawing support and resistance, you might withdraw a support level right about there. And maybe there. And there might be someone in that level there. And the algos tell me that maybe bouncing off of support, and they could maybe take a look at it. This is the RSI indicator. You can use any indicator you want. It looks like we had a coming back around over the 30, and it's normally a buy. Stochastics over the 20, and that looks like a buy. It looks like we'll get a crossover there with MACD, but I don't require that. I look at the MACD when it's below the zero line. And that's the time to take a long, when it's below the zero line. So these 3 things, all 3 indicators are basically saying, hey, take a look at a long. So we want to find a strategy. I think for this is we want it to be above the current level that it is now, 54. Keep that in mind, 54. So what is the expected move of Knight Swift? I use a tool called Option AI to give me that expected move. Type in a symbol and it calculates expected move. The thing about expected move is you don't know if it's going to go up or down, but our indicators on the chart said that it thinks it's going to go up. Anyway, expected move for about a month, and that's what I want to set this trade up for, about a month. They're saying it's 8%. We'll just call it 7. I use an options simulating tool called Option Strat. And if you're a beginner, this is a good place to start. Type in the symbol, your direction, click on that. The target price is with a 7% move at 57.83. And we don't want to spend more than $500. Expiration of July 21st. And here it gives my options. Buying a long call, I don't do that often, but you can make $293 with a $500 call. This is a bull call spread. It's a debit spread, and I usually sell options and option spreads for credit. And this one, you put $155 in your pocket right away, and you're taking on $345 risk. If you add these two together, you need $500 margin. That's the one we're going to do. Setting this thing at 7%. That's your range, 7%. This is our profit line, and we'll take some profit at about 145. With the current price of 54 and a 7%, less than 7%, because you always want to take a little less if you've got 7% profit, we'll do something around 5 or 6, but somewhere between there. And our calculated stop loss is $51.21, somewhere right in here. And it'll be about 130. We'll try not to lose more than $130 to make around 145. Basically a 1-for-1. But if things are going your way, this is what you could win at the end. $170 max. And that's what it says there. And all this thing has to do is stay above 53.30. 53.30. So how do you do a bull put spread? You sell a 55 and you buy a 50. That's the difference between is that's $5 times 100. That's your 500 margin. That's the max you could lose. You don't want it to get down in this area here. You want it to stay up this way. There's the graph. This is your win area and your lose area. This is what I use this table a lot, so I know my expected profit at certain points in time. You always take profit early. In this trade, we're risking $130 to make 145. It's basically a 1-for-1 trade. Ticker symbol KNX. I've traded it several times this year. It's a long direction and using a bull put spread. These are our stop losses. 30 days out, 7% expected move. Target price of 57.83, somewhere right at here, and a stop loss at 51.21, somewhere in this area down here. So your question is it going up? Is it going down? Is it going to reach your target area? But the nice thing is that if it stays above 53.30, and it's right now it's 54, if it stays above 53.30, we have a winner on our hand. And some say it's at support now. It should bounce. So what do you think? Is it going to bounce off of support and hit our target area or continue down? MACD says it might be a time for reversal. Stochastic says it might be. And so is the RSI. It says it might be the time. Please leave a comment in the description below. Like and subscribe. Do your own due diligence. There's other trades like this. All you have to do is find where your support and resistance is, or your chosen indicators giving you an indication that it's time to go ahead and enter a trade. The bull put spread is one of the easiest option plays for beginners, and professionals use them as well. It's one of the first option plays that I learned. Well, that's all I've got for you. Happy trading. We'll catch you on the flip. Remember, like what you do.